Good afternoon, ladies and gentlemen. Welcome, and thank you for taking the time to join us in this lovely afternoon. My name is Chen, representing International Department of Nanhua Futures. In the next hour or two, I will be your host and accompany you to have an in-depth journey regarding QFI with several of our speakers. As you may already know, QFI policy has been announced to change to include futures and options by regulators since the September of 2020. However, 2 years later, as of today, everyone is still waiting for the okay to come out. In fact, if you have attended some of our previous QFI events before, you should know that we have some similar QFI events like this one. But what makes this one stand out from others? Well, given the fact that so many things has been happening this year globally and domestically, we have seen that the China regulators has been quite active in terms of losing the restrictions and infrastructuring the system. If we look back to this year, you will realize that several challenges has been accomplished, including the launching of CSI 1000 stock index futures, including ETFs in Stock Connect, announcing internationalized contract will be available in Guangzhou Futures Exchange, and most importantly, the launching of China Futures Law. So all these movements prove that the attitude of the regulators is still quite positive. So let's keep finger crossed and see if any good thing is going to happen in the rest of the year. Today's webinar is co-hosted by DBS Bank China, who has a strong partnership with Nanhua Futures for many years. Besides, we're honored to have Ms. Ying, representing Han Kun Law Office, to give us an update from a legal perspective. Well, just a heads up, there will be 3 speakers today and no QA sessions until the end of the webinar. So if you do have questions, please feel free to bring it up in the chat room, and our speakers will answer that in the QA session. First, please allow me to introduce Mr. Yan Jin, the Executive Director and Head of Securities and as well as Global Transaction Services of DBS China. Ian is responsible for the bank's custodian and agency services, business development side, and product development. Ian has over 24 years of banking experience with more than 11 years with DBS Bank. Prior to DBS, he has worked for top global banks like HSBC and Barclays. And Ian is going to give us a welcome speech. Over to you, Ian.
Thank you, Chen. Thank you, everyone, and good afternoon, ladies and gentlemen. My name is Yan Jin from DBS China Securities and Fiduciary Services Department. This is the department that provides and is responsible for helping foreign investors accessing to the China capital markets via the QFI and the CIBM direct route. And DBS is really honored to partner Nanhua Futures in this event, and obviously thank Ms. Geyin from Han Kun Law Offices to share her views and to provide insights in the China derivatives market under the QFI scheme. In this webinar, we will strive to provide you with an overview of assessing the China capital markets, particularly focusing on investing in the derivatives market. As what Chen mentioned earlier on, our panel of speakers will touch on key topics covering the below areas, such as opportunities and implications of the new QFI policy that will bring to the China's derivatives market, different ways to participate in the China derivatives market through QFI route, services a QFI custodian like DBS provides, a compliance risk a foreign investor needs to be aware of, how QFI holder manage cross-border cash flows, and onshore taxation. With the gradual opening of the access to the wider asset class in the QFI under the QFI scheme, we are of the view, at least from DBS as a QFI custodian provider, there will be greater momentum for QFI application, as well as foreign investors launching new offshore products, investing via this route. So with this, I will hand over the session to the panel of experts, which will share more insights with you. Thank you very much.
Thank you very much, Ian. We look forward to having a lot more collaboration with DBS and QFI and other areas in the future. All right, now let's welcome our first speaker, Mara Wang, the Senior Manager of International Department of Nanhua Futures. Mara has over 10 years working experience in international finance and fintech industry. She is a recognized expert in providing comprehensive cross-border financial services, specializing in Chinese international futures, QFI, WFI, overseas intermediary, as well as asset management. Mara is going to introduce emerging opportunities for QFI to participate in the Chinese derivatives market. Mara, if you're ready, the floor is all yours.
Thank you so much. Let me share my slides at first. Okay, here you go. Hi, ladies and gentlemen. Thank you so much for making the effort to join us today. My name is Mara Wang from International Department of Nanhua Futures Company. Today, I'm very delighted to give this presentation regarding to emerging opportunity for QFI to participate in the Chinese derivatives market. In the next 20 minutes, I would like to introduce from these 5 different topics because I will focus on the derivative market. So after the DBS areas and also Ge Ying from the law firm, they will have the wild speech from the bank side and the law firm side regarding to the QFI. At the beginning, I would like to introduce for the landscape of Chinese derivatives market to show how fast the development and how big the diversity it is. From the first bar chart, we can see the China in the global position regarding to the trade volume, we already reach nearly half of the Asian region trading volume. Also, it's almost more than 17% in the world. The second table is about the global trading volume ranking from the FIA in the first half year in 2022. How much we trading based on the top 20. So we have the agriculture, 16 products in the top 20 and 14 of the top 20 in metal and 5 of the top 20 in energy. In the end, 3 of the top 20 in the previous precious metal. The third one is easily can find out in this recent 21 years, how big growth of the development of our trading volumes of futures in China. And the last one shows the diversity. The numbers of listed products in the Chinese derivative market is already reaching 99, including 87 in the commodities category and 12 in the financial category. When we're talking about the Chinese markets, it's very important part is about the retail investors. So from the bar chart, we can easily find out from 12 years ago, there were no foreign investors in the market yet, but the retail investor is much more than the institutional investor. The situation started to change in 2013. The foreign investors start to come to participate little by little. Then even now, in the 2020, the percentage of the foreigners still less than 10%, but we still have more than 20% as a retail investors. So that's why for a professional international investor, a market that is dominated by the retail investors and the less advanced domestic participants always presents an attractive opportunity. So when you have the big picture about the Chinese market, you find a lot of opportunities, but how can we participate? Except for setting up a Chinese company immediately, you have 2 main ways to enter. In the roadmap, the blue part is inside of China and the orange part is out of China. So as overseas investors, the first best choice is international contracts. You can choose a broker in mainland China, for example, Nanhua Futures in this map, or you can choose a qualified overseas intermediary out of China to access the Chinese international contract. Now we have 7 futures and 2 options open to the global market. The second one is QFI. QFI is qualified foreign institution investors. So thanks to the announcement in the end of last year, now the commodities futures and options, stock indexed options already in the new investment scope, including the stock indexed futures you already can trade now. Then we are willing to wait for the detailed rules to come out. Then you not only can trade by yourself immediately, you also can invest some products like a private fund or public fund related to the derivative strategy. So now let's add the WFI together in the comparison. WFI means the Chinese company totally controlled by the foreign investors. So let's compare these 3 different channels, which one is the best for you, or you want to combine them together for your long-term strategy. The first one is QFI. So the QFI is always financial institutional and also the trading firm's favorite choice, because now you can trade the stock, bonds, and in the future, you can choose stock commodities future. So you can combine them as a total strategy to like set up the funds, etc. A lot of things can do. And at this moment, you can choose to trade the stock index futures for hedging, compare with your stock strategy here. Then the second one is international contract. As I said, you can choose overseas intermediary, for example, Nanhua company in Hong Kong, Singapore, and UK. You not even need to open like a non-resident account in the bank, because you can just use your global bank account to trade the international futures inside of Chinese market. At the meantime, you can choose to trade like in other main exchange market together. But the problem here is we only have 9 products in the market now. So here is a bit limited for the investment scope regarding to the international contracts. So that's why some foreign companies, they choose to set up a Chinese company inside of China, then they can benefit from all the full range of the products in the futures and options market in the different exchanges. But here we need to be careful. Then you have a Chinese company, it means you have to face the Chinese regulator and need to deal with the tax issue. So for this, later from the Han Kun Law Offices, she will give us some experts for this part also. And here, if you are a financial institution, you have a WFI, then you can apply for the PFM. Then you will have more strategies can play here. If you have the PFM, which we call the private fund manager license, then you even can do the fundraising inside of China. At the meantime, once commodities futures detailed rules come out, you even can get the money from outside from the QFI fund. So the scope will be much wider than now. We introduce all these details because we want all the clients who are interested in Chinese market get real prepared, because now we already have the announcement, and as we know, the exchange market already submit all the detailed trading rules to the CSRC in the beginning of this year. So we're supposed to have it like any day in the future. So it's better to get well prepared. So when this commodities future not come out yet, at this time, you still can trade the stock index futures via QFI, compare with your stock strategy. Now we have IF, IH, IC, and IM. IM means CSI 1000 index, which just launched 1 month ago. So let's see the margin rate here, 8%. It's quite low. So just take the time and the benefit from this and do more things related to the stock index futures for hedging to have fun to try the QFI at this moment. Except for the future stocks index future. So here we would like to give some insights of the new QFI policy regarding to the existing product you can trade now. The first one is international futures contract. Why we bring the details here? Because actually all the Chinese products would already open for the foreigners. The trading rules is exactly the same like for Chinese traders. For example, the funding requirement, the trading experience requirement, and even with the trading hours, margin, and maximum opening limit, the Chinese traders and the foreigner traders, you have exactly the same requirements. So we assume for the QFI opening more products, it's a good time to learn more about the Chinese existing trading rules to get prepared. We can see here the trading hours. We have the night trading hours, which is also a special part in the Chinese market here. And we put the related products in the other exchange market. We can do a bit arbitrage here. When we're talking about the futures investment, of course, the margin call is the most important part we always want to know. So actually, we are a bit special for this part for the calculation. In China, the risk rate is equal to position margin divided by the total account funds. When your risk higher than 80%, then you will get an early warning through your trading terminal. And when your risk reach 100%, then you will get a margin call by your phone or just get the message to ask you add the margin or reduce the positions. But the real situation, like not happened very often, you will keep the risk higher than 10%, 100% until the next trading day, until the 2:30 p.m. Then you have to face the forced liquidation. But this one, like usually, will not happen because our risk management department will check and feeds back the situation for the clients in every real time. But here, pay attention, the night trading is settled on the following trading days. For example, if you get the margin call in the end, like in the night of the Wednesday, then we will calculate on Tuesday daytime, you will face the last forced liquidation on like Friday. So you have 2 days to manage for the situation. And if you are professional investors, the second thing you will care about is IT solution. Nanhua actually is one of the best IT providers in mainland China. As we know, we connect a lot of majority of the IT providers here. So for example, Bloomberg, CQG, TT, eSign, etc. And we also have comprehensive service for the co-locations client. We set up a lot of server rooms nearby the exchange market to offer the trading interface and market interface here. Actually, 2 days ago, I visited one of the exchange markets, want to get a bit more insights from the internally to share with you here today. So they told us the most important thing as our foreign investors care about is not about the price, is not about the speed. The thing is, people want to really understand the Chinese trading rules. So that's why the premium service is one of our unique selling point here. We have our English daily service. We have comprehensive trading notice, and we will help you to understand every single exchange rules. And we will send you daily settlement report in English and Chinese, and no worry for the like margin calls, we will help you to handle it in real time. Except for that, in China, the Nanhua Research Institution is the first research institution in futures market. So we have the confidence to share massive of onshore and offshore research report to our clients, including all the details important here. So from this page, we would like to share what we can help you is we set up the bridge, help you to understand the Chinese more. And at the meantime, during your trading, you can ask us any question and we will help you to understand the rules before your trading. So if you think about, okay, now I'm ready to enter Chinese market via QFI. So what should I do and how long time I need to take? So usually the process probably takes around 2 months because you have the pre-business communication. We need to help you to prepare the document to open the futures accounts. We need to help you to apply the hedging and the trading preparation. We need to do the IT docking and customize the reporting matching. Then you will have the live trading test. In the end, you will have the official trading. So that's why we always highly recommend our client offices, like do not wait in the end for the detailed trading rules to come out, because the document to open the futures account via QFI is always similar to different exchange markets. If now you come to open the account to trade the financial futures, or just open it now, then after, once the detailed rules come out, you can just send us the existing materials. Then you will be the first enters to trade the commodities futures market here. So don't lose time for waiting here. As we mentioned, from QFI, you can trade by yourself. Also, you can invest a bit of the products, like if you found something interesting. CTA is very good opportunity. So that's why when we're waiting for the QFI detailed rules come out, we prepared a lot for our foreign investors. Nanhua is very famous for their asset management service. We call it a fund matching pool, and we prepare a lot of good products in the pool waiting for the QFI open. Then for our QFI client can invest immediately. So what is the process here? Usually we will talk to the client and quality investment advisor to match their needs, onshore or offshore. We can do both. Then we will design the fund products based on all the needs, and we can combine the capacity from the fund manager inside of Nanhua or outside of Nanhua. Then we will put a bit of our Nanhua prop funds to check the stability and the capacity of the fund. When we already have the existing historical data and the performance record, then we will introduce to our client. So from our department, you can access to Nanhua public fund, private fund, wealth management, FOF, and overseas like fund. We have all the financial lessons for this like different fund setting. Here, I would like to introduce our Nanhua Commodities Index. Here, as we know, the Nanhua Commodities Index is the longest index in the commodities market here. We already have more than 16 years. So this is a benchmark for us, for clients to understand the Chinese commodities market here. So if you trade with us or you cooperate with us, we can share a lot of data from this commodities index for you. CTA here, we have different strategies and data resources and target trading frequency. We have, based on this, we have so many different kinds of CTA. So I just picked two to show the good performance in the history. If you have the interest in the CTA, we can set up the meeting to talk about it in details, and we can introduce the top traders in China market for you to design your product based on your needs. In the last part, I would like to introduce our company. So our company is the first A-share-listed futures company in mainland of China, and we have the largest number of overseas institutions to offer the variety of cross-border financial solutions. We have the sub-company in American, in Hong Kong, in Singapore, in UK, etc. And I also mentioned we have the first futures research institution in China. So obviously, we have the advantage related to the cross-border investment. The one of the earliest cross-border investment service team serving the QFI to participate in the stock index future hedging is from our team. We have 12 members who have the overseas study background and more than 8 years experience in futures industry. And we can help you to deal with the settlement issue. And because we are a shared listed company, so we fully guarantee for the safety of your funds. As we mentioned in the whole PPT, we can summarize it in 3 different solutions we are offering now. The first one is futures in Chinese international futures contracts. The second one is QFI and swap, because waiting for the QFI, some client outside want to do some trading out of the scope that 9 products we have in the international futures contract. So we will offer the swap solution here. And the last one is the setting up fund matching pool for the asset management service. And the last one, we want to repeat again for how many IT support we can have. This is really leads us become the best brokers in China, because we have TT, CQG, ATP, ESANI, API, and also Bloomberg. As we know, Bloomberg future tradable futures, they only sign 3 brokers inside of China waiting for the QFI commodities details to come out. We are one of the 3 brokers in China here. Okay, so my speech will just stop here. Please let us know what else you would like to know. And if you need the slides, please tell us. And also in September, we will have another 2 webinars regarding to the overseas intermediaries, and also we will cooperate with BSO to talk about one of the international futures contract in details. Thank you so much.
Thank you, Mara. The speech was really helpful for people who want to get access to Chinese market about QFI. And please remain on the line. And just in case there were questions in the QA session. All right, let's welcome our next speaker, Iris Gao, product specialist of DBS China. She's an expert in the China capital market securities service area with more than 10 years experience in China QFI and RQFI business. Iris is going to introduce the process and custodian services for QFI and CBN. Iris, please start up your session whenever you're ready, and I'm hand over to you, the host. There you go. Hello, Iris.